at least go into it with a strategy, right? Maybe it'll change, maybe the market, maybe the trends will change, or but like you should have kind of a blueprint for what your different pieces of your portfolio are. If this is a cash flow play, this is appreciation. This is a longer term hold. I'm not going to think about this for 20 years. This is something that we're going to try to flip, whether it's a site or a car or a house or whatever it is in 3 to 6 months. So I think that's smart to think about.
Hey there, I am Dr. Jason Ballara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi, everyone. I'm Jason Ballara, and this is the Know Your Why podcast. Today, I'm here with Kyle Kudoreski. Kyle's the operations manager at WebStreet, an investment platform that allows people to passively invest in online businesses and digital assets. Kyle's an engineer turned investor entrepreneur. So, Kyle, this is a fascinating concept to me. I'm gonna stop and say thank you. Thank you for taking the time out today to be on the show. I really do appreciate having you here.
Sure. Yeah. Thanks for having me, Jason. I'm excited to be here and kind of get into my story and investing and wherever we go.
Yeah. Well, let's start there. Let's start with your story, kind of give us your background, and we'll talk about WebStreet and just kind of have a conversation.
Sure. Yeah. My name's Kyle Kudoreski. I grew up in East Tennessee, went to school in Tennessee for engineering undergrad, and pretty traditional path there after engineering school. I did some internships through school and got into corporate America like most college students. Was pretty broke when I graduated. So I got a pretty stable corporate engineering job. Treated me well for many years, almost a decade. Was able to do my master's in engineering during that time and give me a really good start to life, but financially and just from a stability standpoint. But I always had an entrepreneurial itch, as I like to say. And so I knew I didn't want to be in corporate America forever. Not that there's necessarily something wrong with that for people that are. I mean, there's a lot of upside to doing that. But personally, I had an entrepreneurial itch that needed scratching. So I'll pause there and let me know if you wanted any more detail or any questions, or just keep going.
No, I think that that's the background of college and corporate America for a while, and then just having that. So, I mean, it's true. Some people you had a good job, but it just wasn't enough, right? There's something that you want to continue to grow, and I think, and I've found this. Like I think when you're in high school and you're in college, and then I'm a veterinarian, so like all my vet school training, that sort of stuff, you feel like you're growing, but then you go and you get a job and you're maybe not growing anymore. And so I feel like in a lot of instances, that's where that itch comes in. It's like, I got to do something else that just makes me feel like I'm continuing to grow. So, what did you do? Like, what steps did you take? How did you kind of scratch that itch, if you will?
Yeah. So that's exactly it. You're right. I mean, I just wanted to kind of bet on myself and make my own decisions a little bit more and have a little bit more freedom. And the first step for me was really just financially saving up enough money to be able to start to invest and try some different things. So really got deep into budgeting and saving, and then I had to get educated on how am I going to make money outside of my W-2. That's nights and weekends, and there's a lot of grinding there. My first big step was getting into the vacation rental real estate side of things. I still do that today. It's mostly passive. It's not my main focus, but I now live near Savannah, Georgia, on the East Coast, and I really started to pay attention to the demand in this area for vacation rentals near the beach and that type of thing. And so I teamed up with a partner. We put in some money in an LLC and purchased a vacation rental, a duplex over near the beach, and that's been a blessing. I mean, that was the first step, and really worked hard to optimize that with all the electronic door codes and all the automated stuff, automated messaging and reviews and all that stuff, so that I could do it and not have, and hold a full-time job. So once that started to pay pretty well, it gave me more freedom to start to look around for different jobs. So I could take, I could try to start something of my own. What I learned was about the online business world. Even though I went physical vacation rentals first, I came close to purchasing some websites and some digital businesses. Didn't pull the trigger on them, but I learned about that world, and that's what I'm in today, because I believe it's really. I don't think real estate's going anywhere. I don't think art or any of these, the stock market or any of that's going anywhere. But I think online business investing and online businesses have a really, really strong future. We're already seeing it, obviously. I mean, we're on the Riverside app. This is one I love, this podcast app. Really good software. There's just so much out there, but I still think it's early, and I think there's a long way to go. So I wanted to get involved in that space, and that's why we're building Web Street.
Yeah, I mean, it makes a lot of sense, and I think one of the things, AI is a big topic right now, right? And it's like every software, every app, they're all trying to, sort of market their specific AI tools that you can use within them. And as you're saying, that online space, those online businesses and things like that are the space to grow. I think it's so true. I think personally, I feel like there's going to be a lot of opportunity in finding application for AI, right? Like not necessarily developing the AI itself, but like how are the ways that we can use it? How can we, right now it's like with something like ChatGPT, you have to be good at prompting it if you want to get the results that you want. So it's like even figuring out things like that. So what did you? It makes sense to me to go that direction. What type of businesses did you start with, or what maybe you're still targeting, and kind of what was your strategy when you started that?
Yeah, sure. So like I mentioned earlier, when I went to consider purchasing a business, I looked at a bunch of different brokerages, and one of them is called Empire Flippers, and that's really our sister company now. And the types of businesses that they sold that I was considering were Amazon FBA, so fulfilled by Amazon. Most people know what that is by now, but physical products that you're sourcing to Amazon, and they do everything else basically. That's pretty involved. That's not too passive. People thought it was, and a lot of people lost a lot of money with supply chain issues and other things. Also, content sites. So this can be a bit more passive. So display ads and affiliate marketing, whether that's top 10 travel backpacks or just any of these content or review type websites that you visit, those can be pretty lucrative. Software as a service, as we just mentioned, those applications and building software is recurring revenue on your phone or on your computer that you pay for monthly. Amazon KDP, which is Kindle Direct Publishing. You don't have to use the large publishing houses anymore. You can publish a book or anything you want really directly through Amazon. So those are some of the big ones that are for sale on brokerages. And even though I didn't pull the trigger on buying one of those, we heard from a lot of people, I don't have the time or the skills to run those businesses, but I do want to take part in the upside. Can I invest in them? And we said no for a very long time because it wasn't what we did. We just sold businesses. We were a middleman. And that the brokerage side still exists, but we're building the investment arm now. So somebody can fractionally invest in online businesses. So does that kind of answer the question? We can go deeper on any of those, on how those types of sites make money if you want to. But those are the main kinds.
Yeah, I think probably most people know now, what Amazon FBA, or at least they may not be able to run one, but kind of understand the concept behind it. I think it's probably pretty obvious what, Kindle Direct Publishing to Kindle, but you're acting as just a broker of these businesses. You were selling them, but not operating them yourself. Is that
correct?
Kind of...
Yeah, it was just a two-sided marketplace. Empire Flippers has been around for over 10 years. Started out selling $5,000, $10,000, $20,000 sites, and most recently they sold, I know, around a $14 or $15 million site. So significant sizes and legitimate businesses and sites. So yeah, that just Kyle builds a website, decides he wants to sell it, or an FBA store or Kindle's business, and Jason decides he wants to buy one. Empire Flippers is the brokerage in the middle.
Gotcha. Okay. So but so then you wanted to progress to actually owning the businesses and sort of running them yourself so that others could then invest in them. Is that
Yeah, well, more or less. So for me personally, I just believed in this space. And so I got started with Empire Flippers to come on and build this totally separate sister company.
gotcha?
So we at Web Street, Empire Flippers still exists, is still doing very well, selling tons of businesses, high quality sites. Um, we shared a bunch of resources at the beginning as we were getting Web Street off the ground, engineering and marketing, and obviously they have a built-in audience. Um, but yeah, we're a completely separate company now. And we just, those same sites that you could buy on Empire Flippers, you can invest in through us, is the easiest way to think about it.
Okay. And are you, do you, I'm just trying to understand logistically, because it is, I mean, I understand real estate ownership, but it is a little different. So do you, the businesses that people are now investing in through Web Street, you own them?
We do in the sense that we're a partner in the limited partnership. But
Gotcha.
what we do is we go out and find we call them operators or portfolio
Gotcha.
managers. Okay. So these are the people that are in the online business world that have done this over and over. Just like somebody maybe an expert operator at doing multifamily real estate or something like that. These people have built these sites or these businesses over and over, and we pair them with investors. And then they find businesses, they buy them. We oversee all of this as the company. We kind of do the fund in a box model, all the investor relations, all the engineering and all of that stuff. But yeah, so there's really three players. There's the operators, there's Web Street as a company, and then there's the group of investors that invest in these businesses.
Yeah. So would it be considered fund to fund type of model?
Yeah, pretty much. So we're on our 8th fund. Each fund has a couple different portfolio managers or operators in it, and they're generally in different types of businesses. So you're getting diversification across them. Have you ever heard of like a Masterworks or Fundrise or Yield Street where they make fractional investing? Yeah, so you could fractionally own a piece of art or apartment buildings or farmland or wine or whiskey or collectibles, any of that stuff. The easiest way to think about it is we're doing that for online businesses. Okay. Now, obviously, an online business is not a piece of art. Somebody has to run it. Somebody has to grow it. So you need those operators. You need that other professional in the network to do that. What's really nice about that is it's a different play. It's not an appreciation play. It's more of a cash flow play. So as these businesses, when we acquire them, they're already cash flowing, which is really good for investors.
Yeah, no, absolutely. I haven't really given a lot of look into online businesses because I'm just not tech savvy, but we're looking at purchasing business as well to essentially supplement our real estate with cash flow. So I totally get that concept. It makes a lot of sense. How does this work from a like a compliance standpoint? If you have, and again, I'm sorry if this is like ignorant because I'm thinking of this from our multifamily fund and syndication side of things. Do you have similar like paperwork things like? I guess I'm just intrigued in terms of you taking on investors. How does that work?
Yeah, so it's pretty standard as far as how investors come on board. There's a subscription agreement. There's a PPM, private placement memorandum. Okay. All the terms are there on what's paid out, on hold periods, on all of that stuff. And so basically they come on, send in the funds that they want to our platform. And then whichever fund they choose to invest in, or funds, most people invest in more than one. They just sign documents for those funds, and they get cash distributions. So 2/3 of the profit of the businesses every quarter. So yeah, about a month after each quarter ends, any profits that are had, the investors receive 2/3 of those profits. We have a third-party bookkeeping firm to hit on the compliance thing a little more that does all the books. We provide the P&Ls to all the investors. We provide quarterly reports that show what sites are in the portfolio, what they're doing to grow them, what went well, what didn't go well. And then eventually we'll sell the businesses, and the investors will take part in that upside as well at the same percentage, 2/3. And then lastly, from compliance kind of in the weeds here is investors receive a K1 each year
Okay.
from a tax perspective. So it's just if you have any investments that you get K1s from, it's the same thing there.
Yeah, I mean, it sounds like it's very much like a real estate investment, or I mean, realistically, sort of any of that, you're going to have the same. It's just a different asset class. So that's great that it provides.
It's like through an SPV, special purpose vehicle, and we had some compare it to like micro private equity, which is actually pretty accurate. But from a legal perspective, it's basically an SPV, like you're saying, a syndication type model.
Fascinating. What do you listed off some, and maybe diversity is the thing, but do you have specific business types that you like? When you kind of went down the list, you hit some high level points of, the FBA store is a bit more work than people might expect. But do you have favorites?
Yeah. So we're always evaluating this as a company. Because investor returns are obviously the most important thing. If we don't deliver good returns, we're not gonna exist. When we first started, FBA was one of our primary monetizations. It's gotten much more competitive after COVID. Aggregators came in and we're paying top dollar for them. So we're shying away from FBA a little bit right now. With the caveat that we do have some really strong FBA operators in our network that have done it over and over, and their systems work. They have specific niches that they like, right? So maybe it's in the pet niche, or maybe it's in the healthcare niche, and so really strict criteria on what they're going to purchase. So we still like FBA, but we've slowed on it a little bit. Similarly, in content, we slowed on that a bit just because of AI. In the Google's changing the way they're ranking SEO very quickly. It's hard to keep up with right now. We got to see where the chips are going to fall on that. There's still going to be money to be made there. But there's a lot of very poor content out there right now that's done by ChatGPT and other tools like that. That's just not going to rank. And it's, so there's a lot of just kind of lower tier sites out there. So we've slowed on that. What we're very bullish on is software as a service. Now that's a huge category. I realize there should probably be subcategories to that, but we have some operators in the B2B side of things that actually like to do like infrastructure for healthcare systems and things like that, for example. And then we have some operators in the B2C business to consumer, which is, much more common types of businesses. So bullish on SaaS. KDP, the last one I didn't hit on yet, was we still like it. It's there's not as much deal flow out there, but it's less competitive. So the people that are good in that space, they can kind of rinse and repeat their model. And one more that we're getting into that people don't think of often is agencies. So digital advertising agencies, marketing agencies, things like that. Obviously, those still involve people and manpower, but they're, a lot of times they're mostly online type businesses.
Yeah, I guess that does make sense. I don't know why that wouldn't have occurred to me before, but when you say it, of course, that makes sense. Software as a service, it is a broad category, but also, and again, this is definitely outside of my area of expertise, but my understanding is multiples on those are much higher than you might see in like a physical business when you go to sell, right? Is that dependent on the industry?
Yeah, so software as a service is extremely hard to pin down on multiples. It's the hardest by far, from both sides. So a lot of times the people that build them think they're worth much more than they are. But you would think it would be easier due to the recurring revenue model. Yeah. But it actually makes it pretty difficult. Now on the other side, the FBA and content multiples, if anybody has a business out there, they're interested to see what it's worth. The Empire Flippers, and I'm sure other brokerages do, have tools out there where you can go put in your what type of business it is, how much it's got each month, how many SKUs there are, how many customers, et cetera. And it's called a valuation tool, and it'll give you a valuation or a range, right, to at least let you know. But generally, what we're seeing on FBA and content sites is about a 3x annual multiple, 3 to 4x, which is much lower than you might see on some other physical businesses. software as a service, however, ranges greatly. So to your point, it can be much higher, and oftentimes is.
Yeah, and I mean, I'd imagine with something like that, with a SaaS business, it's probably your multiples are bigger with a bigger business, with a longer track record, that kind of thing. I mean, but I have heard now, then you get into that, 10, 15, 20x multiple when you have something that's like really, really desirable product, I guess. So it's a fascinating world, because it's just, we have, in real estate, we have cap rates, and
Yeah.
like commercial real estate, right? We have cap rates, and it's,
Yep.
so well, residential real estate, you have comps, right? From the neighborhood comps, you use things like that. Commercial real estate, you're going to use cap rates, which is, in my opinion, sort of a fancy way of referring to comps. You're still looking at what the cap rate decides the price based on, the income that the commercial property is producing, but you're still getting those cap rates kind of from what things around you are selling at as well. So it's not that far off, but it sounds like maybe there is a little bit more nuanced when it comes to figuring out that those actual valuations. I'm sure market driven as well.
Yeah, you're exactly right. It's definitely market driven, but it is more nuanced. And I mean, for example, there's on a SaaS type business, it's not just what's the recurring revenue, right? What's the monthly? How many monthly subscribers do you have? How many annual do you have? Even if that's a big number, is that coming from 100 different customers, 1,000 different customers, or do you have two large customers that make it risky? If you lose one of those customers when their annual subscription comes up and half your business goes away, like the valuation is different based on those types of things. Same thing with physical products by Amazon. Are you dependent on one SKU, even though you may have 100 SKUs? And if 99 of them are doing nothing and you're dependent on one, or a supplier, you only have one supplier, or you can only ship by sea and not ship by air, or just single points of failure. So doing due diligence on these is extremely difficult. Not that it's easy on real estate, but it's a bit more set. It's a bit more standard.
Yeah, there's a lot of checklists out there for real estate due diligence, to, as far as what this is what you look for, that sort of thing. I haven't seen a lot of that on the online business side of things. Do you? So I guess I would say, like, from a ownership standpoint here, you could start an online business, you could buy an online business, or you could invest in an online business, right? I mean, and this could be applied to brick and mortar businesses as well. But in a lot of instances, people say it's a lot easier to be an acquisitions entrepreneur, meaning you're gonna buy an existing business. Do you think that is similar in the online business space? Do you like?
Yeah, that's a good question. You got it right, first of all, which makes me feel good. I hopefully explained it pretty well on the three options. But on acquiring, it is nice. I mean, it is nice to be able to have something that's already got the groundwork laid, right, and the infrastructure in place to start making money. So I do think acquiring is a very good route to go. That being said, you need to kind of crawl before you can walk, right? Like, it's never a bad idea to try to go build a basic website on your own and before you go try to acquire one, or acquire a much smaller one first and see how you can do, see how you do with it, and go into it knowing, like, hey, this is a $20,000 website. It's not a significant portion of my net worth. I'm using it as a learning experience. Yes, I'm going to try and grow it, and I'm going to try to, make it do well. But if you look at it as a learning experience versus just purely trying to make money, you're probably going to be more successful. And then maybe you buy a bigger site, and that's pretty common. So there's different paths, but I am a fan of acquiring, especially small ones to start with, and getting your feet wet.
Yeah, I haven't, like I said, haven't done a lot in this space, but I've seen them advertising. There just seems to be a really wide range of pricing. Like if you go, I haven't been on Empire Flippers, but if you go on Biz Buy Sell, they'll have brick and mortar businesses and also some online businesses. And it's just, I don't know enough about it to like look and say, is that even the right, like, is that the right price that it should be? But it's an interesting idea to be able to, you know, I would think like using Web Street as a resource and saying, okay, these are the businesses that they're purchasing, and if someone wants to try and do something like this on their own, by the way, being a passive investor in whatever you want is a great idea too. But like, if someone wanted to do an online business themselves, maybe connecting with you and checking out, you know, some of Web Street's funds and what businesses you're focusing on and what, you know, sort of help what are good in terms of returns might be a good way to learn as well.
Yeah, I think that's pretty smart. Kind of using us as a benchmark or guide rails. Not that we're going to get every single thing perfect, but I mean, we do have a ton of experience in this space. The founders of Empire Flippers are still partners in Web Street. They've been at this for, I keep saying 10 years, but I've been saying that for many years now. It's probably closer to 15. So they've seen a lot of changes. AI is a huge change, right? But before that, there was tons of other updates to, you know, the internet changes much more rapidly. That's one other difference I would say in investing or even just taking part in online businesses compared to real estate is the rate of change is quicker. So you need to be able to adapt in these businesses or invest in people that have adapted multiple times before, and you can trust them to figure it out. And the last thing there, when we do try to put a bunch of educational content on our site around what makes a good business and how you build a business to be ready to exit whenever the time comes, right? Because you can't, if you just wait till you're ready to sell and your P&Ls are all a mess and your books are a mess and you just didn't build it the right way. So we try to put a lot of educational material out there just completely free for people to learn. We don't want people, I highly, highly recommend whether you invest with us or anything you invest in, get super educated about it first. Which sounds obvious, but you would be surprised how uncommon
it does sound obvious, but there's a lot of people that are just given, I mean, and this goes to, you know, in IRAs, 401ks, financial advisors, like people are just giving their money to people that and haven't bothered to learn anything about them. And I guess some of it comes to finding an expert and trusting them and whatnot, but you do want to have some base level of knowledge. One thing you just said that I actually think is something I would add to, we talk a lot about diversification of your investment portfolio. And so, you know, that might be stocks and bonds and crypto if you're into that, and businesses and we talk about diversification of asset classes, maybe diversification of holding times, things like that. But also you said rate of change, which is a really interesting point to make, I think, because you may want to diversify your rate of change in your investment portfolio as well, because you're right, like those online businesses, technology changes so fast that is going to be something that's going to have a fairly, need to be adaptable and quick turn. In a lot of ways, I would liken that to like flipping houses in real estate, right? This is like a quick turnaround type of thing. Now you're trying to hold these businesses, I assume, for longer than 3 or 6 months, but still, in terms of what might change within it, you could, technology could change in 6 months. So I think thinking about rate of change in your portfolio is actually a really interesting thing to add to when you're looking at overall diversification, right? You want some stuff that you're just going to keep forever, but some stuff might be, okay, we're trying to take advantage of this opportunity, or we're trying to get in and get out, to before something takes a downturn. So it just struck me when you said that. I think that would be something that would be worthwhile thinking about from a overall portfolio perspective.
Yeah, I think you're exactly right. I think within your portfolio, I think that makes perfect sense. And maybe at least go into it with a strategy, right? Maybe it'll change. Maybe the market, maybe the trends will change, or but like you should have kind of a blueprint for what your different pieces of your portfolio are. Yeah. This is a cash flow play. This is appreciation. This is a longer term hold. I'm not going to think about this for 20 years. This is something that we're going to try to flip, whether it's a site or a car or a house or whatever it is in 3 to 6
Yeah.
months, So I think that's smart to think about.
Yeah, very cool. Kyle, let me switch gears so I can ask you the questions I ask every guest. The first one is based on the name of the show, but I like to ask everyone, what is your why? What's driving you? You obviously had a lot of success, but what keeps you going?
Yeah. I have a real love for life, Chase, and I really enjoy traveling and being active, doing triathlons and all hiking and boating and just getting outdoors. And I have a real work hard, play hard kind of mentality, and so I'm really driven by being able to do the things that I enjoy outside of work, and I'm also driven by being in a workplace that I actually enjoy going to work and doing most days, right? That's pretty rare, I think. And, it wasn't that my last job was completely miserable or anything like that, but I didn't wake up excited to build something or do something. And so I hope whether that's, Web Street for the next 20, 30, 40 years or multiple other businesses down the road, that I never get away from kind of building strong culture and something that adds value to society and gives me freedom to enjoy life outside of work as well.
Yeah, I love it. Makes a lot of sense. I think time freedom is just so important. It's the more people I talk to on the podcast and just out in the entrepreneurial space in general, and it just becomes so obvious that what everybody really wants is just control over their time. Like
Yeah.
regardless of, sure, it's nice to make a lot of money, and you hopefully will eventually make a lot of money if you become an entrepreneur, but it's not that way in the beginning. But the time freedom that you can get from it doesn't mean you work less. It just means you have control over when that is. So
That's right. Yeah. And oftentimes it means you work more,
right.
But when you're working and where you're working and what you're working on are all much more important for sure.
Right. Like you said, having that passion, happiness of about, what you're accomplishing in a day. Tell us something about yourself, Kyle, that isn't common knowledge, special skill, a hobby, just something to let listeners know you better.
Well, my fun fact to go to on this one is several years ago, I raised money for people with disabilities and rode my road bicycle across America. So from San Francisco to Washington, D.C. Was a 67-day trip. Really, I mean, special way to see the country at about 15, 20 miles an hour and, do good for an organization that supports people with disabilities. So that's something not everybody knows about me. That's kind of my fun fact.
That sounds amazing. I've done pieces of cross-country trip over time in a car, not on a bicycle. And you stop, right? Like you pick the spots you're going to stop. But I would imagine going on a bicycle, that's actually got to be pretty amazing way to see the country, like at a pace that you can actually see the country, like wherever you want, and kind of that's pretty amazing, and for a good cause. So that's pretty cool.
Thank you.
One of my favorite one of my favorite answers to that question. That makes me want to do it. I'm like, I don't even like to ride a bicycle very much, but the idea of just being able to do that would be pretty neat.
Yeah, it was a special time. It was a special couple months. But it's a beautiful big country. I mean, even whether you drive or bike or however you do it, I would definitely encourage people to get out there and see it, because there's a lot of things between the big cities that nobody ever sees or knows about.
There is so much to see that we take for granted, I think. So very cool. When people hear this and they want to reach out to you, what's the best place, Kyle?
Sure. So if it's Web Street, our site is webstreet.co, not .com. So there. And my email is kyle@webstreet.co. So super easy. And I'm very active on LinkedIn. If my name is in the notes here, because it's long, you can put it in there, Kyle Kudoreski. I'm very active on LinkedIn, and I love connecting with people from audiences like yours. So feel free to reach out in any of those ways.
Yeah, and we definitely will get all of that in the show notes for people so they have it. My final question for you, Kyle, and it's never actually gone in this direction, but so I I always ask, kind of tell me something or give some advice to someone who hears this and they want to get started. And I can't say I've ever asked anybody who wants to get started investing in online businesses. So, um, uh, uh, what would you say is a good point for people to, if they want to, kind of get in that space?
Yeah, so if it's investing in online businesses, I mean, I think we're the only ones that at the moment, there might be people doing it out there kind of privately, syndicating models, but I think we're the only larger company doing it. So visit webstreet.co, look at the different types of businesses I talked about. I just scratched the surface. You want to know what you're investing in, invest in things you believe in and understand. And if it's not investing, if it's wanting to maybe run your own online business completely, Empire Flippers is a great place to look. There's other smaller marketplaces out there. Flippa is one that it's a little bit more of the Wild West. They'll list all kinds of different sites. It's just a different model than Empire Flippers has from the betting side, but you can get started with much smaller sites and do a little bit more playing and learning without much consequence. And then there's a bunch of other brokerages as well. We buy sites from Quiet Light. There's acquire.com. You mentioned Biz Buy Sell. Any of those places they all have a lot of good educational content, and so I think they're all good places to start. If it's purely investing though, and you get past our learning from our site and stuff, we have an investor relations team you can talk to. We actually require it before you're able to see our funds because we have legal KYC, your customer requirements. But also, we just want to make it sure it's a good fit for people's portfolio. We don't want Timmy's college fund or you to overextend yourself. And we'd like to know who our investors are.
Yeah, no, yeah, it's really important to be mindful of the investors and that there's someone that you don't want to take their last dollar as an investment because not every investment goes perfectly. So it is a super important point, and I'm glad you mentioned that. Kyle, thank you for coming on the show today. This is very, very interesting. I'm going to check out WebStreet and Empire Flipper. I think it's a really, really fascinating space. So thank you for coming and sharing your story. Appreciate you being here.
Appreciate it, Jason. Yeah, let's talk again sometime.
Yeah, absolutely. Folks listening, I know you're going to love this one. Check out Kyle, connect with him, check out Empire Flippers and WebStreet, and please like, rate, and review the show so we can get more great guests. Thank you all for listening.
Hey there, I am Dr. Jason Ballara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?